Hello, my name's Caroline Barr. I'm a member of the Financial Services Consumer Panel. The panel advises the Financial Conduct Authority, the UK Financial Services Regulator, on consumer policy. We're not the regulator itself. We advise them and we're independent of the regulator. As you might have seen from my background, my biography, I do have a background in banking. I did the graduate training program with Lloyds Bank many years ago, and I was an associate of the Chartered Institute of Banking. So I've got some memory of what it's like to work in a bank, although I do think it's changed a huge amount since then. So today we're talking about the guidance that the FCA issued earlier this year on how firms in the industry, not just banking but across the industry, should be protecting vulnerable consumers. Now, this has long been a key priority for the FCA. The Financial Lives survey that the FCA published a couple of years ago showed that a staggering 50% of UK adults display one or more characteristics of being potentially vulnerable. And when things go wrong financially for vulnerable customers, the impact on them is likely to be much greater than for other customers. So let's click forward to the first slide. The drivers of actual or potential vulnerability that have been identified by the FCA include, but are not exclusive to, the following: health conditions, life events such as a relationship breakdown or a bereavement, low resilience to withstand financial or emotional shocks, which could include mental illness, and low financial capability or confidence, so a lack of understanding, a lack of financial literacy, which is a particular problem in the UK. So let's move forward to my next slide. And why has the FCA developed this guidance and published it? Well, in spite of what they say are their extensive efforts to improve firms' treatment of vulnerable customers, and the considerable efforts of many firms, they found that there is still room for improvement. And there is a lack of consistency across financial services sectors. Some firms, they find, are still failing to consider the needs of vulnerable customers, and this, they say, could lead to harm. They expect firms to treat all customers, including vulnerable customers, fairly. So the FCA is consulting on draft guidance outlining its view of what the principles for business require of firms when dealing with vulnerable customers. In its mission document, the FCA has stated that securing an appropriate degree of protection for consumers lies at the heart of what it does, and it stated that it would be more likely to intervene where it's identified actual or potential harm for vulnerable consumers. It also stated in its approach to consumers that it expects firms to exercise particular care where consumers may be vulnerable. In response, firms asked the FCA for greater clarity about what they should be doing and how the principles for business should be applied. This guidance for firms is the FCA's response to that, and it means to use this guidance to monitor how firms treat vulnerable consumers and to hold them to account if they breach these principles. They stated, "We want to see doing the right thing for vulnerable consumers deeply embedded in the culture of firms, and as a result, for firms to be more focused on ensuring that the outcomes experienced by vulnerable consumers are at least as good as those of other consumers, and that there should be greater consistency across firms and sectors so that vulnerable consumers are treated fairly in whatever financial service or product they buy." Now, just to give a bit of background, the principles for business overlay the rules that exist in the rule book that's published by the FCA. So if there isn't a rule that covers it, That doesn't mean that you can do it. A principle for business is the guiding principle over which all of our behaviour lies. So the principles for business underpinning the fair treatment of vulnerable customers are, and we'll just move on to our next slide, Anna, thank you. Principle 2, this is the need for a firm to conduct its business with due skill, care and diligence. Principle 3, a firm must take reasonable care to organise and control its affairs responsibly and effectively with adequate risk management systems. Principle 6, a firm must pay due regard to the interests of its customers and treat them fairly, also known as the TCF principle, the Treating Customers Fairly principle. Principle 7, a firm must pay due regard to the information needs of its clients and communicate information to them in a way which is clear, fair and not misleading. And Principle 9, a firm must take reasonable care to ensure the suitability of its advice and its discretionary decisions for any customer who is entitled to rely upon its judgment. So the key principle amongst those is clearly Principle 6, the one that underpins the firm's need to take particular care in the treatment of vulnerable customers. This, says the FCA, requires firms to understand what makes customers vulnerable, to understand their needs, and to ensure that the products and services they provide support for the fair treatment of vulnerable customers. Under Principles 2, 7 and 9, Anna, if I could ask you to move the slides forward, firms should understand the characteristics of being vulnerable and act on this understanding in terms of their communications and any advice they provide to vulnerable customers. Firms are expected to integrate an understanding of the needs of vulnerable customers in how they manage their business. Principle 3 requires the business to have the necessary knowledge and skills to treat vulnerable customers fairly and to have adequate control systems in place to mitigate the risk of harm to vulnerable consumers. The FCA has also provided clarity about what firms should be doing to treat vulnerable consumers fairly at different stages of their interactions with them. And this includes firms should understand the needs of vulnerable consumers in their target market and their customer base. So firms need to think about who they think the product or service they are developing is suitable for and understand the needs of any vulnerable consumers that might be in that target market. Firms should ensure that their staff have the skills and the capability to address the needs of vulnerable consumers they have identified. And firms should translate their understanding of the needs of their vulnerable consumers into practical action in terms of how they design their products and services to take into account the needs of vulnerable consumers and how they ensure the level of customer service they provide meets the needs of vulnerable consumers, and how they communicate with vulnerable consumers. Finally, Anna, could we have the next slide, please? Firms are expected to build a process to monitor outcomes experienced by vulnerable consumers and learn from this process to continuously improve and update how they treat vulnerable consumers. This needs to become a normal part of business. And the FCA has said that it will be on the lookout for initiatives that grow and fade. Their intention is clearly for this to be an ongoing change in how firms deal with their vulnerable customers. Our consumer panel supports the FCA's guidance in principle, but we still believe that a new duty, a statutory duty of care, is required in an asymmetric market such as financial services, where the knowledge in the market is with the provider and the lack of knowledge is with the customer. Firms, by the product design and their conduct, can cause or exacerbate consumer vulnerability. Consumers can take responsibility for their decisions and actions only when firms meet the business principles that we covered earlier. The guidance issued by the FCA reminds firms that some people, by virtue of their characteristics or their experiences, are less able to take responsibility, and firms owe a duty of care to those customers. This is a critical message. This guidance is about making sure no one is left behind under current standards, but a new duty would raise those standards for everyone, whether they're vulnerable or not. This guidance doesn't create any new requirements of firms, but it does help firms understand their obligations to vulnerable customers. The panel, though, doesn't think it goes far enough in helping firms understand their obligations to avoid excluding vulnerable customers from accessing products or services. So the panel would also like the FCA to clarify that the guidance should cover different routes to market and business models. For example, frontline staff, outsourced staff, franchises, etc. And we'd like to understand better how the FCA wants the guidance to apply to more innovative distribution channels, and in particular the use of automated decision making. It needs to be rather more forward-thinking. Also, the boards of firms are responsible for firm culture, and treatment of vulnerable customers is really a cultural issue. So it's the boards of your banks that are responsible for the implementation of this guidance. Finally, there was no mention in the guidance of the principle for business relating to conflicts of interest, whether that be between the firm and the customer or between different groups of customers. So to slide 7, please, Anna. In a banking context, the guidance poses some serious challenges. Increasingly, there is a propensity to rely on digital channels to deliver products and services. The questions for banks are, how do they propose to comply with this guidance when they seldom have personal contact with their customers? How will they meet the training requirements for frontline staff to identify and respond appropriately to the needs of vulnerable customers? And how do they build fair treatment of vulnerable customers into their product, service and development? So that is what the guidance is asking firms to do. I'm very interested in hearing from those who are live on the webcast now as to whether they think this is a realistic expectation, or whether they have any good suggestions as to how it could start to be implemented. I just also wanted to speak very quickly about my own personal experience of being a vulnerable customer. The reason I was asked by the CBI to come here today is that I spoke at a conference quite recently about my experience, and they wanted me to share that with you. My husband died very suddenly, leaving me with 2 young children, and my interactions with the financial services industry included my mortgage holder, my current account holder, my life insurance provider, and my asset management advisor. And I had very different experiences across all of those. I think being a vulnerable customer makes you really unable to deal with even very ordinary circumstances, and you're not running your life in a normal way. So you're not checking up on things in the way that you did the day before you found out your husband had died very suddenly. You're not doing the normal checks and balances through your accounts and your investments. And I think there is a lack of awareness of how a vulnerability can impact We can all be impacted by being vulnerable. Anything can come out of the blue, and you may think you know how you're going to react, but you really don't. I do remember when my youngest daughter was 2 and my husband had been dead a year, and we got the interest statement on her savings account and her older sister's account at the same time, and one was far greater than the other. And given that we'd really opened the accounts together, I didn't understand it. So I went into the branch, and the cashier there took me to one side and said, well, your younger daughter has an obsolete account. And that was absolutely meaningless to me. It was a bank account that was being used to deposit social security payments to save for her future. So to me it wasn't obsolete. And as somebody who was trying to hold a family together, the idea that you should, as she suggested, go into the branch every month and check the interest rates on your kids' savings accounts was just preposterous. So vulnerability at that point really hit home. I have to say, I felt like I was being mugged by my own bank, who I'd banked with for decades. Vulnerability can also affect the elderly. My mother-in-law got a phone call out of the blue professing to be from her bank, saying, there's an inside job, you need to move your money. And she was obviously very stressed by that. They said, go to your bank branch, tell them to move the money to this account. She did. There was a power of attorney on the account from her daughter. She told the cashier she was moving the money to her daughter, and the cashier said, that's not a local sort code. And she said, no. But she didn't go any further than that. And the cashier had known my mother-in-law for decades, and she knew she'd recently lost her husband. She knew she was in poor health. She knew she was having some financial difficulties, but she quite happily moved her life savings to a branch of Ulster Bank in Londonderry. And it's understanding the vulnerabilities of your customers, whatever part of the bank you happen to be in, that puts you between them and being scammed out of their life savings or being coerced by a family member. And so you play an important role. This guidance goes wider than that, though. I can see we've got some questions coming in already, so I'm going to take the first one, which says, and thank you for saying it's a great talk, whoever you are, that's very kind. Where do you think the main sticking point is right now? Policy, procedures, or people, the knowledge and skills, or the policy practice gap? I think it's actually a mix of all those things, and thank you, that's a great question. I think actually there needs to be greater dialogue between people in the banking sector. Let's stick to banking because we are at the CBI. I think we need some pragmatic suggestions as to how this is going to work in an industry which is increasingly distant from its customers. The idea that a banker will know who in their customer base is suffering from a bereavement or a mental illness is getting increasingly remote as a possibility. I think there are great intentions if you talk to any board member of a bank. I think everybody is absolutely 100% behind dealing with vulnerable customers in a way that is compassionate and protective. But actually the processes within banks, I think, are not very flexible and don't allow there to be the kind of relationship that existed decades ago, where you met with your bank cashier at least on a weekly basis. I don't think that actually is a possibility for many people anymore when we've got an environment in which branches are closing quite rapidly. I also worry about the knowledge and skills of many of the people who do, in those branch situations or in the call centres, have contact with customers. I remember from my own banking experience that many of those people were very young and just didn't have much experience of life, and expecting them to understand the needs of the person in front of them if they are complex is a big ask. So this is going to impose quite a serious training challenge for banks as well. So I think it's a combination of all of those things. But that's a great question. Thank you. I like the one about dementia. That one's quite close to home for me. My stepfather was recently diagnosed with dementia. How do you identify a vulnerable client remotely who may, for example, have an onset of dementia? Well, I think that is for your internal training, again, to look out for signs. I'm no expert, but I think if you can tell from people's transactions that they are not behaving in the way that they normally behave, this could be either dementia or it could be going into an episode of being bipolar, where you go into a manic episode. It could be a sign of depression, it could be a sign of any of those things. Or it could be a sign that somebody is expecting a huge amount of money to turn up. So you really don't know, and I think that is really the crux of the problem that needs to be solved. When you don't see your customers personally, how on earth do you find out if there is something wrong with them? But this is something that the FCA is looking out for. It wants to know that you have systems in place that can identify somebody who's in trouble. And I think, as I said, the banks need to be working with the regulator to think about what is something that is compliant with data protection, which respects the dignity of your customers and protects your relationship with your customers. It's a challenge. Okay, we have some more questions, Anna? Right, thank you for sharing your story. One issue I've come across is that not all vulnerable customers self-identify as vulnerable. That's absolutely right. Absolutely right. Do you think the guidance steers organisations well enough on this aspect and the associated sensitivities? Again, this is a massive challenge. You may well view somebody as being vulnerable because you're looking at them thinking, well, they're quite elderly and they may not look like they're very well kept, and you might think actually they've got some issues, but they're obviously a dignified person who doesn't want to be identified as vulnerable and doesn't believe they're vulnerable. I've got to be honest, there were times after my husband died when I thought I was absolutely on the ball and making good decisions, and I'd look back 6 months later and think, what on earth was I doing? Vulnerability is very hard for some people to identify in themselves. So I think there needs to be, again, more conversations about how that is done respectfully. Another organisation that could help in this respect is UK Finance, to bring together people from the banking sector and say, okay, what do we think is reasonable for us to do, and have that conversation on your behalf with the FCA. If we're going to take another question, I'm going to take a sip of water. So, could having vulnerable customer champions in banks help spread advocacy on frontline customer services, and banks encouraging excellent service awards for this? I think professional bodies like CBI could create awards for role models in the industry for improving financial services for vulnerable customers. That's a great idea. I do remember years ago we did have, it was always in our branches, one of the older female members of staff was responsible for dealing with bereavements or marriage breakdowns, that kind of thing. They would, bring the box of tissues and talk people through it, and their service was just exemplary. I think there should be wider recognition of when people do the right thing. I mentioned earlier that I spoke at a conference about my own experiences, and there was a very senior executive from Nationwide there, and she told a very different story of an attempted bank scam where an elderly gentleman came into the branch and said he wanted to withdraw all of his life savings. I think it was something like £90,000 plus. And the cashier just thought, this doesn't feel right. And she said to him, why don't we go and have a cup of tea while we sort out the paperwork? And she sat down and had a very long chat with him. And it turned out that it was a family member trying to coerce him into giving them all of his money. Now, I thought that was just a brilliant example of somebody who wasn't just trying to push customers out the door really quickly and treating them all as though they were all having a great day. This was somebody who could see in the customer in front of them somebody who was clearly not comfortable and needed to have some extra time. Under the bank pressures that you're under when you're serving a customer to get people out of the door quickly and get the queues down, it's really hard to resist the urge just to do the transaction and get them out. But that was a really good example of somebody who thought, yeah, I need to go the extra mile. And I wish there were a set of awards for the people who do provide that level of service. In my mother-in-law's example, the extra mile the cashier went to was to read the company disclaimer that they relied on to defend themselves against any action. That isn't going the extra mile. So yes, I would love there to be some awards for those people in the banking sector who take care of the customers. I've got another good story actually. A friend's father-in-law, I'll name the bank, NatWest, and he's very elderly. He had an attempted scam. I think he transferred some money on his computer and they said, we need some more. And he said, well, I've reached the limit. And they said, well, go to the branch and do it. So he goes straight to the branch, and the manager at this little NatWest branch smelled a rat, said, what have you done? He explained. She immediately took him back home, logged onto his laptop, found out where the money was sent, got in touch with the branch and dealt with it. It's another outstanding example of good service for our elderly in the community. All right, there's a real stigma around the word vulnerable. The next question, can we choose another name for it that is less stigmatized to make this feel more normal or more comfortable? Well, given that over half of us are vulnerable or potentially vulnerable, maybe it's the not vulnerable who should feel a bit stigmatized. They don't fall into the category that most of us are going to fall into. A good idea, if you can come up with something, or maybe some of those who are listening now could come up with better words. I agree, it does make you not feel quite so good about yourself if you self-identify as vulnerable. Can we come up with something better? Ideas, please send them. Another good one. As ICT becomes more critical to the bottom line of banks focus mainly on remote and faceless banking, absolutely. It's important for them to include TCF as part of their performance indicators. What are your views? I think TCF should be part of the board's performance indicators. I think there are too few discussions in the bank boardrooms about treating customers fairly, and when they make decisions, whether it's about branch closures or new channels which exclude people who don't have access to online facilities, they need to consider TCF in those proposals, and it's just not good enough that they leave it to people at the front end of the process to implement it. Great question. Okay, let's take another one. Only realistic to cover all aspects to be covered by larger organizations. There are some areas that cannot be covered by small firms like sole traders. This particular for new complaint management company rules which tie into the same principles. Thoughts on capital costs of changing services, for example, blind or deaf where physical costs are required. Well, you have to comply with what the regulator says you need to provide if you're going to claim that you are providing a service in that area. I think I don't know if you are a CMC, but if you are a CMC, then yes, the same applies to you. And again, we wouldn't want vulnerable customers to be excluded from your products and services, but you do need to think about how the way you do business doesn't exclude them. We have another question. That's okay. We're just struggling with the volume here. The guidance mentions specialist units as a possible way forward. What's your view on this? Is it really embedding the right culture or just moving into a controlled area? Well, that is the risk, isn't it? And actually, if you aren't making sure that across the front line people can identify, then it's not going to work. It's only those that are identified that would be put into a specialist unit. I think specialist units for referral are a good idea. As I've said, the bereavement units that our banks have, they have some fantastic people in there who genuinely empathise and understand, and importantly have all the answers that people are looking for. So in principle, a specialist unit can have the expertise in it that helps the customer find the right answer as soon as possible, but it doesn't remove the need for people across the front line who pick up the phone or respond to an email or in a branch, that the onus is on them to identify, and that's where the training need is going to be greatest, I think. It's actually being able to identify this person needs help. I'm not competent to give it, but I've got the number here, the person I need to call, and I can get that person in front of the guy that's going to be able to help her. That's another good question. Right, still haven't got any alternatives for the word vulnerable, which we're still looking for. Okay, more questions? There are no more questions? I think we've gone through all of them. Okay. Right, I'm going to take back this question about finding a less stigmatized term than vulnerable. I think that's a really legitimate question. But again, if you in the CBI can come up with some, it would be valuable, I think, to the regulator. If there are no more questions, does that look to be it, Anna? Yep. Oh, there's another one there. Are you aware of any good examples of best practice from other sectors or even other countries where they do this better or are more sensitive to customers' changing needs? I think if you look at the water sector, they have some really good practices. Obviously, if a customer doesn't pay a bill, they're really reluctant to cut you off from your water supply, which I think is a good thing. So they do have some good practices at identifying vulnerability. And I met the chair of the consumer panel of, I think it was the telecoms industry, and they share our views as well, that actually vulnerability is not a permanent thing and it can impact on anybody. So they also have some good examples of how you identify. Any further questions? No? Should we just end it there then? Thank you very much for listening and participating. Some really good questions. I appreciated those. And I hope you all enjoy the rest of your day. Bye-bye.